Hey guys, welcome back to the channel Let's Make a Mill, as well as my own personal blog, letsmakeamill.com. In today's video, I want to talk about a new position that I'm adding to my REIT income portfolio. For those of you who don't know what a REIT is, it is a real estate investment trust, right? It trades just like a stock on the stock market, but I added a new position to my subsector, and I'll talk about that here in a minute. And I also want to talk about a portfolio, or give everybody a portfolio update on my M1 Finance REIT income portfolio. So for those of you who don't know who I am, I'm Eugene Vasquez, and I'm basically using this channel to document my journey towards making $1 million. And the way I do that is through investing in the stock market, like in indexes, as well as individual REITs, as well as investing into real estate. And I also invest into a non-traded REIT, which is known as Fundrise. I'm sure most of you are familiar with Fundrise. So without further ado, let's get into the video. All right, so let's talk about the new position I added. I added a company called Wp Carey. It's been on my radar for quite a while, but I just never pulled the trigger on investing in it. And then back in January, I sold out of all my individual positions and then just threw all the money into the index. But now, since things are looking so favorable, the actual real estate index still has not fully recovered. So a lot of REITs are still on sale. So I started a new position in Wp Carey, stock ticker WPC, and here are the reasons why I decided to pull the trigger. For one reason, it has over 20 years, that's 2 decades worth of dividend growth. All right. And even in this pandemic, these last couple of months, it has not cut or lowered its dividend, which to me is a big deal. Because if I'm investing into a company, I don't want them to cut my dividend. During this, virus, during this outbreak, a lot of companies have lowered or cut or suspended their dividends, so it has hurt some of those dividend investors. But I'm very confident in Wp Carey, and I'm very confident in its management, and I'm very confident in the direction that it's heading. Just some quick facts about Wp Carey. Wp Carey actually invests not only in the United States, but it also invests in a great majority of the EU. I believe the portfolio split is like 66% in the United States and 34% in the EU, and that's spread all up and down Europe. Where in the United States, it's in the West, it's in the East, it's in the Southeast, and it's in the South and Midwest, right? So it's investing in like all over the United States. So if you don't know what a triple net lease is, that's what Wp Carey is. It's similar to like Realty Income, or similar to like National Retail Properties, stock tickers O and stock tickers NNN. And basically what it is a company that provides a space for a tenant, right? And the tenant, could be like Burger King, could be Cheesecake Factory, could be 7-Eleven, could be Dollar General, could be, like LA Fitness, could be, just everything else, a furniture store. Basically, these tenants go into an agreement with the REIT or with the company, the Triple Net Lease company, to rent that space over time, right? They put them on a lease. But here in this particular business model, where in traditional real estate, you buy a property, you rent it out, the tenant pays, your mortgage or pays a rent, right? That's it. And you're responsible for the maintenance, you're responsible for the real estate taxes, and you're responsible for the insurance. In this business model, it basically takes it, flips it. So the tenant, like Burger King, McDonald's, Cheesecake Factory, 7-Eleven, they go into this agreement where they'll cover the maintenance, they'll cover the insurance, and they'll cover the real estate taxes, and they'll pay the rent, right? But the rent is on an agreement that it can't rise for a certain amount of years, right? And that this tenant will be in that place for a certain amount of years. So it's very favorable when these companies, like Wp Carey, get these tenants that'll stay long term. You're thinking like 3 to 5 years, maybe even longer. So it's very favorable when they get them on these leases. All right. So that's pretty much just some facts about Wp Carey and what a triple net lease company is. I'm going to go ahead and log into my M1 Finance portfolio, and we're going to go over some allocations that I changed up and kind of just, why I did what I did. But before I move on, one last fact about triple net lease companies. Right now in this current environment, the way the feds are acting, the Federal Reserve, they lowered interest rates, right, to near zero, and they're probably going to keep it at near zero for a very long time. So that is something that's very favorable for real estate, anyone in real estate really, and it's even more favorable for triple net lease companies. because they have access to cheap money for their mortgages or for financing. And the debt that they're going to owe is it's almost negligible compared to some of the debt that was taken in 2017, 2018, 2019 when the interest rates were starting to rise, right? And a lot of these companies are now starting to refinance their properties. So this is why the environment is very favorable for real estate, for any company in real estate right now. But let's go ahead and log into my M1 Finance portfolio and we'll explore it a little deeper. All right, so now I'm logged into my real estate income portfolio hosted on M1 Finance, and I'm basically just going to go over kind of the changes I made. So as we could see, I'm at a value of $10,700. That is a cash position of $10,700 with a $50 gain. Yesterday's sell-off kind of affected my gains that I had on Thursday and Wednesday, but that's okay. I'm a long-term investor, so it's not going to really phase me. And the cheaper shares get, the more I'm going to buy. So I reached a huge milestone. I finally reached $10,000. So my next goal is going to be $20,000. Hopefully by the end of this year, we'll see how this kind of plays out. But let's get down into the portfolio and the subsectors. So as you can see, I actually increased my triple net lease companies to 25%, right, of the overall portfolio. Right now, there's only $2,600 in the subsector or in the pie, and these are the companies I'm invested in. This is Wp Carey right here. I just opened that position yesterday. Yesterday was Friday, so that's when I made my buys, right before or in the morning. As we can see, Wp Carey is right here. It has a nice, healthy, there it is, 6% dividend yield, which is fantastic. This is probably one of the highest dividend companies that I'm investing in right now at this time, because sometimes you gotta kind of like balance, high dividend with risk. Luckily, Wp Carey, for me anyways, is a nice balance of risk and yield. Typically you'll find some companies, especially like the malls out there, the mall REITs anyways, that are like super high dividends, but they are some risky plays. They'll promise you 11% dividend, but it doesn't mean they have to pay you. So you could get burned. So going back, so right now in the grand scheme of things, the feds are keeping the interest rates very low, right? This is really good for real estate, and this is even better for triple net lease companies. And the reason why is because these triple net lease companies, when they take mortgages or they finance the properties that they're after, they've already taken them at, high interest rates, relative to what they are today. Interest rates in 2018, 2019, heading into 2020 were pretty high. And then the pandemic happened, and now the feds are keeping the interest rate almost near zero, which is great for real estate. And like I said, even better for triple net lease companies, because now they could refinance their properties, refinance all their holdings, and kind of get some of that cost savings and cash out. So giving you guys a overall look at the portfolio. I had to change, like I said, I had to downgrade my apartment REITs down a bit. I love apartments, and I love the picks I have. I have no change in my, picks. I still invest with ESS, Camden Property Trust, Avalon Bay Community, and I forget the other one. Wow, I'm terrible. I'm sorry. And EQR, Equity Residential. So I'm still investing with them, but I had to lower the target to 15%, just because I wanted to increase the triple net lease to a healthy size relative to the overall portfolio, because I believe that triple net lease over these next coming years, because of the macro, because of the big picture environment, is going to be very favorable for these companies. So I'm very excited to see how these next couple of years play out. I also took just 1% out of storage REITs and lowered it down to 12% from 13%. Apartments, I believe I had it at about 21%, and I believe I had triple net lease at 18%. So you can see kind of the increases that I've made. Overall, the portfolio is doing really well. I've been collecting some dividends here and there. And I'm just and to talk about the actual dividend increase for this portfolio, we'll quickly go into research, go to my pies, real estate income portfolio. So looking at the kind of overall yield after making some of these changes, my yield increased to about 3.8% only recently because some companies are paying their dividends that it lowered down to 3.78. But I'm still over the threshold of 3.5%, which is my target minimum dividend yield. And I hope to increase it either through different allocation strategies or whatever, or weightings to hopefully maybe 4%, maybe 4.5%, because hypothetically on a $100,000 investment in this portfolio, it would generate between $3,500 a year to $5,000 a year, depending on the yield. So just something to think about. So if we look at my triple net lease pie or subsector within my REIT income portfolio, we could see that just out of these couple of companies here, just out of these 6 companies, it's producing a dividend yield of 5.3%. So, I'm not saying just invest in this portfolio, but it is pretty interesting to see that, the dividend yield for this portfolio is yielding pretty high, almost higher than most ETFs that are out there, or high dividend ETFs that are out there. And these are all companies, in my opinion, that are relatively safe, that have conservative balance sheets that are, poised to grow, increase their dividends over time. I mean, Realty Income is like the dividend king. It's just always consistently increased its dividend over time. I think in the last 10 or so years, 10, 15, 20 years maybe, it's actually outperformed the S&P 500 index. So that's with dividends reinvested. So that's the key, with dividends reinvested. So that's pretty much my market. That's pretty much my portfolio update that I just wanted to give everybody. This was, I struggled with kind of deciding how I wanted to restructure this, because there's just so much going on in the stock market. There's so much going on in general. The virus that's out there has caused mayhem. Right now, there's a lot of analysts saying, oh, we're going to be going through another dip here very shortly. So, I'm thinking I may hold on to some more cash. I'm still going to dollar cost average this portfolio because I don't care. I'm holding it for the long term, so it doesn't really faze me if it goes down in value or if it goes up in value. I'm still going to invest in either scenario. But, just want to talk about the mindset and kind of where I was going with this. I love my apartment REIT, and I truly believe that the picks that I have in there are going to perform very well over the long term. But, right now, looking at the short term, I wanted to take advantage of the triple net leases and, the growth that they're going to have. The environment, like I said earlier, is just so favorable for these types of companies. And as the economy comes back, as the economy starts to reopen, and as tenants start to pay their rents and everything, triple net leases are just going to grow, and they're going to get all those nice returns back that they had pre-pandemic. So I'm very excited for the triple net lease REITs. And we'll just kind of see where it goes from there. Hey guys, one thing I meant to mention before I cut the video short, I wanted to talk about the allocations or the targets that I chose and why I chose them for these particular companies. SRC and VEREIT, the reason why I have them at 5%, and some of you may be asking why even have 5%, right? And with these players, right? They're riskier relative to the other players in this industry, but I still like their direction. I still like where they're going. So WPC and Store Capital, these are 2 great up and comers. Like these are going to be really good companies to hold for the long term, right? You have NNN and O, National Retail Properties and Realty Income that are, they're the biggest players in that sector, in that industry. So I kept both of them at 25%. They both have great histories, great dividend growth over the long term. WPC and Store, they're still working on their balance sheets. They're still relatively, growing. Only time will tell, but they're much safer than the other 2 companies, SRC and VEREIT. So that's why I am keeping WPC and Store at a nice 20%, and the 2 other major players at 25%, and then keeping the lower 2, SRC and VEREIT, at 5% each. So that's just kind of my thoughts on my allocation sizes and targets, and why I'm keeping them at that size. I just wanted to give you guys a quick update on my new position into Wp Carey, as well as a portfolio update. You know, this is a milestone for me. I don't think I ever mentioned it publicly, or maybe I did, I don't know, in one of my earlier videos. But basically, I wanted to get this portfolio to $10,000 for this quarter, and then hopefully I'll get it to 20,000 by the end of this year. So, you know, big milestone for me. I'm very excited, and I'm very excited the direction of this portfolio. And I hope you guys enjoyed the content that I provided, and you know, kind of the positions and everything else that I'm talking about in that portfolio. If you find any value in these videos, I'd like to know down below in the comment section. You know, if you liked the video, you know, give me a thumbs up. If you didn't like it, no problem. You know, hit the subscribe, notification bell. I'm trying to produce more content as, you know, things become available, or as, you know, moves and investments become available. But, you know, again, hopefully I'll see you guys in the next video, and take care and see you guys.